Renewed fears that Beijing may roll out more restrictions for private enterprise sent Chinese tech shares to their worst two-day drop since July. Bloomberg's Alex Webb joins us now with the details, and we're just looking there at the toll that this latest news flow has taken on some of these Chinese tech names. Then, Alex, bring us up to speed with what is the actual news flow here. Is there news flow, or is this a lot of hearsay about something that might or might not be happening in Chinese tech?
It's a little bit of both, basically. There's a hearsay in the sense that there was a post on Chinese social media which suggested there's going to be a new crackdown coming. But that was completely unsubstantiated. The account which posted it has since been deleted. Tencent came out pretty vociferously afterwards. Their spokesman said on social media as well, there is no truth to this. But at the same time, there were also some warnings from state authorities about the metaverse and the fact that the metaverse is rife with scams. That doesn't augur terribly well for companies like Tencent if it's indicative of a broader pushback on the technology.
OK, and that's not the only place we saw the pushback. We saw stories around Ant Group as well, and some of the companies that do business with them, or basically businesses being asked to assess their exposure to Ant Group. I mean, this has been a company, Jack Ma and Ant Group, it's been in the crosshairs for a long, long time. What's the latest there? So
Ant Group was supposed to IPO during the lockdowns and never did because there was a huge pushback from China at the time, and they pulled the plug on it. It's got its fingers in a lot of pies. It's invested in a lot of other companies. China was saying that their state-owned firms in particular need to evaluate their relationships with Ant Group. We don't quite know what that means, but it clearly doesn't, again, suggest that it's terribly bullish, that China is massively confident in the future of these companies.
Yeah, it's interesting. I talked to an investor earlier on who was saying it's just really unclear at this point what room there is for private investment, private money in the common prosperity drive that she has underway. And until we get more clarity on that, it's difficult to reach firm conclusions, was his view.
Yeah, and it's really reflected in some of the valuations of these companies. If you look at a company like Tencent, it seems like there are discounts being priced in because of this regulatory risk. And so it trades at something like 27 times forward earnings. That's a bit of a discount to the likes of Apple and Microsoft, and in particular Amazon. OK,
we started this conversation talking about concerns around the metaverse, and there's a sort of gaming link there. Let me take you to another story, which is FTX, the crypto exchange FTX, launching its own gaming unit. What do we make of this development?
Well, it is interesting that FTX obviously is an exchange for cryptocurrencies, but a lot of people think that when it comes to the blockchain, NFTs in general, that gaming is really where it does have an application. You can be sniffy about what NFTs really are and what they do, but in a world where you might be paying, let's say you buy a Burberry skin for a game that you're playing.
Let's say you do.
Let's say you do.
Yeah.
You've got enough money to spend on that. Proving that that is a real Burberry skin and that it's not one that it's a rip-off, then that might require an NFT, or an NFT might be a way of demonstrating that. So therefore, FTX is trying to gin up this sort of business and encourage more gaming companies to adopt this technology.
OK, so they're using gaming of NFTs, something that we certainly watch. Alex, thank you so much.